So we see here, yes, the market do have such kinds of feeling. Even New Zealand, we don't have much people here compared with other cities. So supply and shortage do have give us more confidence in that
awesome.
market. Yeah.
Welcome back, Leverage Addicts, where we talk all things property and finance strategies. I'm your host, Blandon, and today we are joined with a remarkable guest. He's actually managed over 300 properties in New Zealand, helping people build houses, and he's built his own developments. Now, he's actually taught me quite a bit over the last few years, and he continued to teach me new things. Welcome, Frank.
Yep. Thank you, Blandon. Yeah.
Awesome. I want to give you guys a bit of a backstory as well, because I met Frank through Han, and Han is an architect. You guys might have seen his episode earlier. We talked about the unitary plan and what are the opportunities there. He owns his architectural firm, quite young, successful guy, right? And one time I asked Han about some development project, and he's like, oh, you got to go talk to Frank. Frank's the guy that you need to talk to. So he introduced me to him. We sat in the cafe one time, and that was it, because we sat down. At the time, I was learning about joint venture deals and how to structure them with my family. I haven't bought a proper development site that I wanted to develop yet. I had the Menariwa property at the time, but I wanted to buy one where I could do terrace house. There was a couple of deals that I already pitched my family, and it didn't work out. I sat down with Frank and I showed him a little bit about like, hey, what I'm thinking about doing. And then he pulls out his spreadsheet, and instantly I was in love. With his work, because I realized there's going to be a lot that I can learn from this guy. And I was just really amazed. And since then, I use the same structure that he has taught me around structuring a deal where general partners and limited partners, you guys can look it up, right? General partners, limited partners, especially if you're trying to scale your portfolio. Those are the things that you need to learn. It's like how you can structure a deal with friends, with family, with other, close acquaintance. That's the next level, because you will run out of capital at some point. Quick plug-in as well, before we dive into today's podcast, is that if you find value in today's episode, all I ask for is one thing, and that is to smash the like button if you're on YouTube and share this episode with one person who will benefit from it. So Frank actually have a business operations background. He's worked in Dubai, Singapore, and now he's in New Zealand permanently, moved his family over. Delivered over 300 properties, as we said, in New Zealand, and in the last 36 months, he's given a lot of insights in terms of my investing, and that I could pass on to my clients. Yep. So we're going to learn about his journey today, sort of how he got into it, why, what are the decision-making process, investment philosophy. We're going to dive into that a little bit, and some of his greatest lessons with doing so much capital raising, buying deals, acquiring the deals, and then even selling it in different markets. You've sort of like seen the boom, like you were already doing deals before the boom happened. So if you guys are here, then sit back, relax, and enjoy the show. Again, welcome, Frank.
Yes. Thank you, Blandon. Thank you for your invitation today. Yeah, my pleasure to be here today. Yeah.
Frank, I just want to kick off. What inspired you to get into property development? Because you started in business administration and operations.
Yeah, Blandon, as you know me, years ago, I was in Dubai. So in one of the biggest construction and real estate company. So I was in the operation management department. Working together with the top management for all the, real estate sense. So from that young age, maybe I already get used to the property development sense. So later on, when I was in Singapore and also New Zealand, we found this property development business is really a good business for me, especially for young, investors together with maybe some smaller developers background. Yeah. So this is a really good market. So the first time when I was here in New Zealand, 2017 or 2018 around, so I really found that market is really, worth to invest, because you can have your own benchmark. You can have your own portfolio. Not like other countries, you will have huge requirements for the amount. But here, so if you have such amount, you can do such things.
Right. So what you're saying is maybe there are less red tapes. You can get into the market as long as your capital.
This is one of the key things. Secondly, there's a shortage at that time. I say when I was in New Zealand. So two things inspired me. Over those years. Yeah.
Supply and demand.
That's right.
Okay, so I wanted to know what were the numbers that you were playing with at the time, because you talk about trend lines, like,
Yeah.
yes, there's a shortage and maybe it's easier to get in.
Yeah.
What sort of numbers were you playing with at the time so that you're like, okay, this makes sense to try and pursue this?
Yeah, as we invested and worked, around lots of places to see here, 2017, 2018 years, I think in New Zealand, especially in Auckland, the housing price is not that much high compared with the tier one cities. Mega cities in other countries like Singapore, like maybe Shanghai, Hong Kong, and other cities. So we really found New Zealand still have some places to go. So that one do happens, I think, in 2017 and to 2021. We see the circle still going up at that stage.
Yeah. What were the indicators back then? Like, obviously, in a much bigger firm, what were the things they were looking at?
Yeah, firstly, from the investment part, I think the very initial sense for the property development is to see the timing and phase or the circle. So the first thing when I reached New Zealand, so I just drive everywhere. In Auckland, everywhere. Yeah, really everywhere. So I drive all the places and check all the locations, amenities, and everything later on. So I searched about the business circles and read all the bank reports together with some economists' feedback on the current economy. Together with my experience in Dubai and other countries, I really find that time, even that market at that time was not that much good. The national just been, I think maybe out of the control for the government and the labor and be elected. So that's a transition time.
John Key stepped down.
Yeah. So maybe that time was not the good time for the investment. But however, when we enter into this market, when we see, wow, still there's lots of opportunity, especially for the redevelopment concept of 2017. Yes. So that's the initial, inspiring for us to see, hey, there's still lots of room, lots of spaces, lots of opportunities for us to do the redevelopment compared with Sydney and Melbourne cities. Still, New Zealand, Auckland has lots of, opportunities over this kind of business. Yeah.
So if you have to narrow it down to 3 or 4 big trends, what were they? What did you see? Like, you probably looked at a lot of graphs and data. So what were like 4 key statistics?
Yeah, the first thing I would like to see the timing always, even now. So I think for numerous times, so the timing is quite important time. So if you enter the market into 2021, so you will see how this one will suffer. So the timing would be the first thing. Always, I will suggest to everybody.
But how do you know it's a good time?
Lots of indicators, lots of figures. You will see as you can see that one. So you can find these things from statistics from the REINZ, so from the QE, from all the available resources. So from those resources, you can figure out, hey, what's the market, what's the demand, what's the supply, and what's the market price going on up, and what's the circle over here. Yeah. So what's the current stage under the circle? Normally, I see New Zealand.
You mean the property cycle?
Yes, property cycle or the economy cycle. Yeah. Normally, people will say New Zealand have a 7 years property cycle, but I would believe when 2017, I cited the 18 years cycle.
Yeah.
So
so you saw much. You actually zoom right out.
That's
it's
right.
not just
that's right.
1 decade.
I had one seminar. Over there in 2018 around. So shared with some audience regarding the 18 years cycle. So exactly, New Zealand was in the maybe booming stage at that time. So only 2 or 3 years to go. So later on, the things happened the same. Yeah. So this is one thing. Secondly, as you see that the supply and demand. This is one big thing. The third one at that time we see there's opportunities.
So if we go back to supply and demand, exactly what are you trying to look for here?
Yeah.
How do you know there's a shortage?
That's easy to find, actually. Everybody would have the available resources from the government, figures. This is one thing. So available figures, government figures, your agent feedback, but those figures are only for reference to you. So you should really talk to those maybe newcomers, whether they are easy to find a house or not, easy to buy a house or not. If they want to rent one, whether easy to get it or not. So
new migrants.
that's right. That's right. So for one thing, you have the available resources or available information through all the agencies, from all the authorities. But later on, you should also yourself check with agent. You go to the rental market. So you go to the house purchase market to see whether they have real demand or not. At that time, as I mentioned, I worked everywhere, and then I drove everywhere, and then I saw lots of open homes. I do feel how many people went to the open homes for the renting. Even the first month when I arrived in New Zealand, for one renting house, within an hour time, maybe more than 20 groups.
Really?
Yeah.
Jeez, a rental home.
Yes. So that's the exact feeling. So we see here, yes, the market do have such kinds of feeling. Even New Zealand, we don't have much people here compared with other cities. So supply and shortage do give us more confidence in that market. Yeah. So later on, as you can see, that 2017, 2018, 2019, even 20 and 21, so the market is still going on. Yeah.
That's awesome. So what about like the third and the fourth, if there is a fourth?
Yeah, the third one, as you can see, the trends for the government, money policies or the financial policies, that's quite important. We see there's a trend. Maybe in future the OCR will step down. So which happens maybe from 2020 to 2021, and so the OCR is down. So the government policy is another quite important. Elements to affect the residential market or the housing market. Yeah, because if your rate like the recent time, if the rate is really high, so maybe people cannot afford. So affordability during the market at that time, so it's really another indicator for us to make a decision.
I see.
Yeah.
Yeah.
The last one I would like to see. Together with the government policy to embrace the other, migrants or not. Yeah, if the government, restrict, the people to come, like during the COVID time, so maybe the demand and supply will change a little bit. Yeah.
Yeah, that's interesting. Yeah, affordability is such a huge factor. I had CoreLogic come on. They do a lot of property data insights, and they said that's a huge factor for supply and demand. And
as you can see that the government, from the Reserve Bank or some other maybe government agencies, every year they will have the affordability report. So I read through everything. So as you can see, those reports sometimes may be useless, but sometimes for information only would be quite helpful when you enter into a new market.
Because you're trying to do is essentially benchmarking all of those things against other countries that you guys might be investing in or already doing business in.
Correct.
That's really good to know.
Yeah, you must have several benchmarks in your mind or in your portfolio to invest at that time. So we have a bottom line to say here: if any property less than 25%, margin, not net profit, margin. So we won't invest.
Yeah,
yeah.
Because if a lot of the time we're just a New Zealand property investor, we might just be in our own bubble and we don't realize how good we have it.
Yeah.
And so because you've been to other countries, you could see a lot more of those trends and how that sort of plays in the overall world. That's good. And so if we fast forward a little bit, because you then decided to move to New Zealand.
Yep.
How has that sort of played out for you? Like why? Well, first of all, why did you decide you want to move here? Because Singapore seems like a good choice.
Yeah.
And then how has life in New Zealand been for you? Like what have you found differently? What kind of adjustments do you have to make?
Yeah, I think the first motivation for me would be the lifestyle here. I mean the real lifestyle, not the property lifestyle. Yeah, property lifestyle is also good thing, but the lifestyle here in New Zealand. The environments. The government policies together with the opportunities for us. I think that's the most. Driven. Parameters for us. Yeah. My family do love here, since especially my wife, when she came here to say, wow, this is New Zealand. Yeah, this is beautiful. Yeah. So
they didn't say it was too boring, like not enough stuff to do, or
we are the guys love the scenic view together with the environments here. So that's the reason immediately when we're here, we stayed several months and then we say, hey, this is places we want to go.
That's awesome.
And together with we found, wow, there's still lots of opportunities for us to invest. Then we say, hey, this is the right place. Yeah.
That's good. And so you decided, okay, this is a better lifestyle. And how do you think your mindset in terms of how you invest or do business in New Zealand compared to like, let's say back in Singapore or Dubai?
Yeah, several quite significant difference over there. The first thing I would like to see in Singapore or the other countries, if you want to buy properties or if you want to invest in properties or if you want to involve in the development, firstly, you will have lots of, high criteria like the buy a piece of land very expensive. Buy a piece of house, high-end house. There's no any houses with large pieces of land. Those things are already quite rare, already quite expensive over those cities. But in New Zealand, you can still buy a large pieces of land with a property. Even you can do renovation or do redevelopment. So in here, it would be much easier for you to accumulate your wealth. Portfolio compared with other countries. So for the sense that I'm doing. So that's one of the major driver. Yeah. Secondly, as you can see, the education for children, the whole living qualities here in New Zealand. In Singapore, as you see, you have the same amount, but you can only buy a small apartment. But here you have same amount, you can buy a house. Yeah. So that's a different sense. Yeah.
That's good. And you talked about how 2017, 18, 19, 2020, like that's a boom market.
Yeah.
We had properties, prices going up, funds, interest rate only went down.
Yeah.
Now it's a complete different environment.
Yes, totally different.
How has that affected that market that you were playing in? Because you were serving a lot of investors overseas.
Yes.
Potentially they were putting funds together, acquire property, develop, and then dividends gets distributed out.
Yeah.
What's that market like now? Like, are there still demand, or how has that shifted? Yeah,
I would like to see this. This is the opportunity for the investors because maybe 2 years back, I talked to one of my major investors. I said, "Why you invest in New Zealand, not Australia?" And this guy said, "New Zealand is a market sometimes with a significant increase or rapid, decrease for the price in the property sectors." He mentioned to me, if by this way, this is a very good chance for the investors. Only doing the property buying and selling.
Yeah.
And he only asked the investors 2 questions. To me also, when did you buy and when you will sell? So that's quite 2 important things. This sense means, so the timing, still the first sense, still the timing. Same like maybe in 2021, I have some investors strongly insistent to sell all the properties in hand.
Yeah.
So which they did, and we helped them to do so. So they get all of them sold.
They would be very happy now.
Yes, that's right. So they get all of them sold, and then during 2021, 2022, 2023, what's that doing? They're doing mortgage lending. Yeah, and 2024 now they are buying now. Yes, with our guidance and help, they are buying now. So the market change, but opportunity is still here. Depends on what's your investment philosophy here. Yeah, that's quite important.
It does make sense because I think if you look back in 2020, 2021, it kind of was like a musical chair, right? Yeah. A lot of these development companies that we saw just around us, all of the ads were like coming up every single week.
Yeah.
And then you just see, wow, this company picked up another development and they're scaling so quickly.
Yeah.
But then when 2022 comes, almost everything dried up. Like you don't see the ads anymore. You start seeing liquidation.
That's right. Yeah.
And so if a more experienced player that maybe play more of a aggregate economic factor sort of strategy, they would see that sort of coming. Okay, actually property prices are probably slightly overvalued. It's better to let go. And the cheaper the funds get, the tighter you need to get with your deals.
Yeah.
And making sure that there's enough margin and enough cash.
That's right.
And so, it just sounds like you had a lot of very experienced investors around you that knows, okay, we need to play with the cycle.
Yeah, that's one thing. Sometimes you should spend your time, to educate them. Not all of them will follow your philosophy together with your concepts and your vision to this market. Because, those investors, they are experienced investors, invest in different countries, different places, and sometimes you will spend time convince them, hey, this is the right time to sell or the right time to buy. That's not easy. Yeah. So the first thing, still as I mentioned, so in the property investment, most important thing, you should spend more time study about the cycle instead of stepping into directly. Yeah. So the right time to buy, right time to sell. and use the proper amount, to hold. That's the key sense for property investment. I think that's the most important sense for all the successful investors.
One thing you taught me when we sat down, and even now you talk about it, is be conservative with the numbers.
That's one thing. Conservative about numbers and be very clear for the timing.
Yeah.
Yeah.
And I do remember you always play around with capital injection as well, because at certain times you might want to have higher capital injection.
Yes.
At certain time you might go, okay, actually we are maybe in a bubble.
Yeah.
Potentially funds are cheap, but you kind of need to resist and put more capital in.
That's right. So as I just now mentioned, so once you are clear with the cycle and what's the stage over there, so you will decide how much money and what's a guarantee you can use, how much leverage you want to use, because in the peak time, so if everything going up, so you can do a little bit more leverage here, but at some time you must stop that. Yes, if you don't stop, okay, you will be a huge disaster.
Yeah.
Yeah.
Definitely. Like I learned it firsthand as well, because I remember 2021, like it was a good time.
Yeah.
Funds were cheap, and the bank is like, I wasn't looking for own occupied, but the bank's like, hey, here's another 1.7 on top of what you already have.
Yeah.
I'm like, man, it's just so hard to say no to, because the funds were so cheap. In hindsight, like I would have used that money to buy much more cash, like a lot more cash flow, opposed to like a big asset that had very low cash flow.
Yeah.
Because I had to make adjustment in the subsequent years, because I think that time I pushed myself like too much.
Yeah.
But luckily, I think foundationally my portfolio was decent, right? Like I had some cash flow property, I bought another cash flow property. So yeah, I think in hindsight, now I've experienced the principles you're talking.
Yeah.
And it's just like doing them.
Yeah, together with as I shared with you in the Excel sheet, so you should have your own financial modeling. So once you step into the property investment to see if the selling price being such, what's the return? If your selling price, going down, so what's your return? So you should always have the sensitivity test or the pressure test, to see what's your model.
That's definitely something I put in my spreadsheets after seeing Frank's.
That's right.
That's awesome. And so if we come back to now, what are you focused on?
Several major things. I think the first thing, maybe for the property investment is to find we see either cheapest property, or we see the opportunity properties to buy, because still I have lots of investors together with me. We are searching something to buy. This is one thing. In current market, we do have lots of properties worth it to invest. Like one of my business partner, he just bought 6 pieces in last month.
Wow.
Yeah. Because we found in current market still there's a lot of opportunities, even a little bit cheaper price or very good price. Compared with years ago, even the price was and are 5 years ago. The price, So this is one thing we are focusing. The second one, just we want to build up the whole portfolio, not only in the residential part, but still some a little bit maybe light commercial, because still New Zealand have some restrictions for the overseas investors. So we have a little bit of portfolio for the mixed use properties. Yeah, so that's the 2 cents for Singaporean and Australian guys. Yeah, so those 2 cents are the current cents we are doing. Yeah.
That's awesome. And what about your own developments? What have you got on your own hands right now that you're working on? There's one that you are working on in St Heliers that's really interesting. Like maybe give us a high level of the projects that you have yourself.
Yeah, I just bought 1 or 2 pieces of land. As you mentioned, in the St Heliers areas last year, and want to get it developed and hold for a while. So that's the sense happening now. Don't have much progress at the moment because still under resource consent stage. So once the resource consent and all the consent being ready, so I would build up it right now. Since the current market, you will get a lower construction cost. Even the financial cost is still being here, but the construction cost has been significantly dropped compared with last year. Maybe I see 20 or more than 20% from my current knowledge. So this is a really good time to build if you want to hold the property at the current moment, not for selling. Or the financial leverage you should not use too much. So if the financial leverage too much here, you still feel the same pressure under the finance part. Yeah.
Yeah.
So
and give us high level of the numbers. What does the St Heliers project look like? Acquisition costs, construction costs in value.
Acquisition cost, I think it's much lower than the CV. So what I get, maybe I see maybe 40% lower than the CV price. Which is really a good price. Yeah, construction cost.
How big is the land?
1,000 square meters around, but I bought the CV around 3 million. So but bought it around 2 million around. Yeah. So as you can see,
just slightly over 2, I remember.
Yeah. So around 30% discount. I mean, from the CV price.
And how many are you building on it?
We built only 3 or 4. Yeah.
3 or 4?
Three properties, about a little bit larger properties. Yeah.
Yeah. So, and if you build 3, how much is the end value for each?
Each of them maybe around 2.5 to 3 million.
2.5 to 3.
Yeah.
Okay.
For each.
So essentially, you spend 2, and then how much construction cost per one? Plus holding, plus finance.
Construction cost, I think currently for those one, if we're a little bit high end, I would like to see 3,500 around. So for each square meters, only construction cost only. Yeah. But if you want to go more higher end, the price would be around a little bit higher. Yeah. But even that price is still much lower than last year. If you see a normal one, we see the terrace house or the other single houses. So the current construction cost, I guess, would be around 2,500 around. Yeah. So last year, as you can see, some construction price would be 2,800 to 3,000. I mean, for the terrace house. But currently, you can just get maybe 2,500 or less. Yeah.
Really?
Yeah.
I want to lock in a contract then.
Yeah, because some materials, especially the labor cost has been significantly dropped. Yeah, during the past 6 months, I think. Yeah, but some of the materials still going up.
Interesting.
Materials,
So what we're talking like 700K per acquisition piece of land per lot, and then what are we looking at for construction? 1.3 mil each.
Almost. Yeah.
Yes. So we're talking about 2 mil. So your lowest profit margin will be 500K each.
Depends on the leverage of finance. So you should also deduct the finance cost if any.
Oh, yeah, because I was thinking 1.3 would include your finance, but maybe on top of it you need. Okay, so then that's
still
your
profitable. Yeah.
that's your low margin, which is like call it 400,000 each, and then if it's a better market, potentially like
that's the same.
600-700K each.
Yeah, that's the same. Yeah.
Oh, interesting. Okay, and if we look at someone who wants to get into property development, okay, maybe someone's got a bit more capital, they understand, if you guys listen to Frank, it's not for everybody, right? Development is like if you buy a land bank right now, you're bleeding cash if you're buying 100% finance. But if maybe you're switching out some of your deals in your portfolio, sell like a 3-bedroom unit or 2-bedroom unit, now you've got 1 mil cash, you buy a piece of land, they want to do development. What's your 3 or 4 advice that you would give them?
I think maybe the number one rules, from my understanding, is to say your whole portfolio. Yeah, because as you mentioned, everybody have a different, investment portfolio together with the funds or leverage they can use. So to have a comprehensive understanding of your portfolio, that's the quite important sense, because not, as you mentioned, not the development is not suitable for everybody. Some of them, maybe they just want to buy a pieces of an existing house and to wait for the capital gain, or some of them just buy a rental properties, or some of them just buy pieces of sections to build by themselves. So different portfolios, different methodologies, different strategies over here depends on his own needs. So portfolio analyze, is the rule 1. The second sense, I think under current market, I think don't make the leverage too high. Yeah, because if your finance cost is too high, so that one will bite out your margin. Yeah, sometime if the selling is too slow. Yeah, so this is or I think majority of the developer will suffer at the current moment. The house been built but cannot be sold. But the finance cost going up every day. So that's quite disappointing for all the developers at the current moment. This is the rule 2. I think the third one is English professionals. If you don't understand quite much, so you must have very, very good, solid professionals who will help you to do such. Yeah, some of them maybe they think, okay, I can manage everything by myself, but that's wrong sometimes. Yeah, you think you will save a little bit, but in the end you lose a lot. Yeah, because you may make some mistakes in between, and those mistakes will cause huge cost which you can't see at that moment. Yeah, so that's maybe the typical 3 suggestions for everybody here. Yeah, especially for the new beginner, for the property investors.
Awesome. And so if someone wants to reach out, how do they reach out? Actually, like, you haven't even told anyone what you do now. What do you do, Frank?
Yeah, actually, I'm doing development management, development and consulting at the moment. Yeah. Also, I'm one of the shareholding in capitalhq now. Yes. So capitalhq, we're also doing the similar. Investment in future. We are finding our joint venture partners. So we guide them, help them, and doing all these things together. So utilize our experience, knowledge, lesson and learns to make every project which we invest, we help, or financially success. So every time I talk to my client or friends or investors, so the project should be financially success, not just maybe physically success. It's not a success. Financial success is real success. Yeah.
So if you guys don't already know, Capital HQ is a new business that Frank, David, Andrew, and I started. And what we focus on is property development. How we can help is start with the consultation, because you could be in different stages of your development.
Yeah.
And because David and Frank combined built over 800 houses, they have a very strong background, with Frank in the finance sector before, and then now David was actually a lawyer. So they've done a lot of developments, and we've got a lot of clients. We can see how we can get a better return on investments. And so if you've got a development that you just want to consult, you can reach out to Frank at chq.co.nz, and you can just do a consultation and just see if your opportunity is a good one. But keep in mind, Frank will charge by the hour because he's a consultant.
Yeah.
Awesome. And any other things that we've missed out talking about today? Well, what do you think? Is there any other advice you want to tell our listeners today?
Yeah, I think maybe today just maybe to get everybody knows me, and we just say hi here with each other. So later on, maybe you guys want to know more about me, so we can just maybe contact with each other by email, or you have a pieces of land to develop. You want some maybe professional opinions on the development together with, you want to see my spreadsheet together with the financial modeling. I can just be definitely here to help. Yeah.
Yeah. Awesome. Yeah. That was so insightful, Frank, and thank you for sharing today. For our leverage addicts out there, and if you're still listening, again, I just ask for one thing. If you have found value, that is to share this episode with one other person who will benefit. I'm your host, Blandon, and I'm signing out. Thank you, Frank.
Thank you, Blandon.